Hello traders, welcome to my channel Trend Tracker. I've spent the last year testing AI trading systems, and here's what you need to know. Artificial intelligence isn't a crystal ball that predicts the future. It's a co-pilot that spots patterns you'll miss every single time. While you're scanning 5 charts, AI is processing millions of data points, parsing earnings calls, and detecting regime shifts in real time. In the next 3 minutes, I'm showing you exactly how this works, with real examples and the top tools that can give you an edge. Here's the problem every retail trader faces. Too much noise, not enough signal. You've got price action, volume spikes, news flow, earnings transcripts, social sentiment, and macro data, all hitting you simultaneously. Your brain can't process it. You miss the unusual options flow at 10:47 a.m. that signaled the afternoon rally. You don't catch the shift in management tone during the Q&A that predicted next quarter's miss. This is where AI changes everything. Supervised machine learning models train on years of price and volume features to recognize patterns that precede moves. Natural language processing reads every earnings call transcript, press release, and news article in seconds, scoring sentiment and extracting signals. Unsupervised algorithms cluster market conditions and detect regime changes. When correlations break, when volatility regimes shift, when the market transitions from trend following to mean reversion mode. The key is backtesting and avoiding overfitting. An AI model that's 95% accurate on historical data but fails forward is worthless. The models that work use walk-forward optimization, out-of-sample testing, and cross-validation. They're trained to be robust, not perfect. If you like this video and wish to see more videos from my channel, please subscribe to this channel. I tested 3 scenarios where AI caught what I couldn't. First, earnings call sentiment analysis. An NLP model parsed the CFO's language during guidance. The stock traded flat after hours, but the AI flagged negative drift risk. 2 weeks later, the stock was down 12%. Second, anomaly detection on unusual volume. A clustering algorithm spotted abnormal call option flow 3 days before a biotech announcement. The AI alert triggered at $23. The stock hit $31 on the news. Third, regime detection. A hidden Markov model identified a shift from low-vol grind to high-vol mean reversion in the S&P 500. It automatically switched from momentum strategies to short-term reversal trades, avoiding a 6% drawdown that caught trend followers off guard. Trade ideas. Holly runs real-time AI strategies. TrendSpider automates pattern recognition and support resistance detection using computer vision. No more manual trend line drawing. Kavoot uses machine learning to rank equities with a K-score, predicting relative performance. AlphaSense is your AI research assistant, searching millions of documents for sentiment shifts and thematic signals. Quant Connect lets you build and backtest your own machine learning strategies in Python or C series with decades of data and live execution. Here's how to use them without blowing up your account. Set alerts based on AI signals. Price crossing a predicted level, volume exceeding a threshold, sentiment score dropping below a trigger. But always confirm with your own backtests. Check win rates, profit factors, maximum drawdown. Use proper position sizing. Risk 1-2% per trade. No matter how confident the AI is, set stop losses based on volatility, not hope. And remember, this is not financial advice. These are tools, not guarantees. The AI gives you an edge. Discipline keeps you in the game. AI won't make you rich overnight, but it will show you what you're missing. The traders winning today aren't the ones with the best gut instincts. They're the ones augmenting their process with machine intelligence. Start with one tool. Backtest one strategy. Set one smart alert. The edge is real, but only if you use it with discipline.